I'm having almost 12 years of trading experience. I'm basically managing in total $4 million of prop firm funds. I started almost like almost everyone else is we developed our own fundamental proprietary indicators. The best tip is don't focus on money.
If you could introduce yourself to the community, just so everyone's aware of who you are and how long you've been trading and that kind of thing. So I'll leave that to you, Bernd. Off you go.
All right. Thank you for the for having me. This is Bernd. I'm having almost 12 years of trading experience, and from that 12 years, I'm trading full time 10 years. So maybe I'm also your oldest podcast guest that you had so far. I'm 40 years old. I hope I don't look like 40, but
no, you don't. You're younger than me anyway. So
I have a family. I have a wife. I have a 9-year-old daughter. So I provide for them with trading since 10 years. And I'm based in Dubai, and I run a licensed investment consultancy since 2019. And if I have to classify myself, I would classify myself as a swing trader, and I trade basically all markets. My background is futures trading and stocks trading, and 4 or 5 years ago, I went into forex CFD trading. And yeah, that's basically in a nutshell, that's my background.
Okay. What brought you to FundedNext then? What attracted you to our particular company?
Well, it's quite interesting because almost 11 months ago, I started a YouTube channel as well, just to share a little bit of my experience. And I think the YouTube channel was growing quite nicely. And then also FundedNext approached me for collaboration, if I'm fully honest. But I also said that I don't do affiliate marketing. I just always want to stay neutral. But I told FundedNext that, hey, what I can do is, I like your setup. I like your company. I like your prop firm. What I can do is I can do a challenge. I can do a live challenge documentary on YouTube. And FundedNext agreed to that. So what I was doing, basically, I went through the entire challenge process. I did the challenge live on YouTube. I recorded literally every day. And then I went through the verification. I recorded the verification every day. In fact, it's all on my YouTube channel, and it's all it's all there because I recorded every single day. The verification I passed in one single day, so that was quite nice. So I have this.
Nice.
I have this in less than 24 hours. It's on my channel, and it's quite nice because it's all documented. And then I went to the funded stage. The funded stage I didn't record anymore, but I had also. Immediately after the first month, I had my first payout, I think 5,800 after the profit split, if I'm not mistaken. And so that's how we started to work together, FundedNext. So I was doing that YouTube challenge documentary, and the people liked it. The people really liked it. They really liked seeing me trading and doing my analysis and getting into the trades. Also the emotional roller coaster, being in the minus, being in the drawdown, and then like, oh my gosh, and then price turning in your direction. So everything is there. So people really enjoyed watching it.
Cool. Sounds interesting. I'll have to watch it myself. So you're obviously happy with the FundedNext environment then? You're the execution platform, the assets, the slippage, the spreads?
I never experienced any issue, to be honest. It's really, what I like about, in general, FundedNext is a really smooth process. Everything is kind of self-explanatory. Also, once you get your challenge, and then immediately into the verification, and then you get your funded account, and then even you get your payout within, like, this was super quick, everything, and painless. No issues. And I think within 1 or 2 days, I had the money in my account. So the funds, my profit. So really, it's all very smooth. And this is what I like about this prop from FundedNext in particular.
Yeah, they've got it all sorted. It's a great platform now. Everything comes together nicely.
Yes.
So Let's talk a little about your actual trading style then. You say you're a swing trader. So
Yes, if I have to classify myself, in general, I would consider myself a trader, trader by trade. But if I have to classify, because my execution time frame is usually a daily time frame, so that's why people would say most probably I'm a swing trader and definitely not a scalper.
Sure. Yeah, for sure. I think that's how most people classify it. So execution on the daily as well?
Execution is daily, but my analysis is like from monthly, weekly, daily down, basically.
Okay, cool. All right. So I mean, I guess that's most people's definition of swing trading for sure. So is there
100%.
Is there any particular concepts that you trade?
Yes, absolutely. So I have a lot of experience, obviously. So what I did is, me and my team did, is we developed our own fundamental proprietary indicators. So they're developed by us, they're proprietary.
Okay.
And we use them. So I call this a two-step mechanical process. So we use fundamentals. It's the first step of the process. I use fundamental data that to get biased in the market, basically, whether I'm going to be bullish, bearish, or neutral. But usually the problem with fundamental data, it's very subjective, right? Everybody has opinion about fundamental data. Yeah. But what we do with this fundamental data, we can plot on the charts. So we developed indicators derived from fundamental data. And we can plot them on the chart and make them, in this case, more objective, or actually super objective. And this is where I get biased, bullish, bearish, or neutral. And if I'm neutral to a specific market, then I'm staying away. But if I'm bullish or bearish in a market, then I move to step 2 of my mechanical process, which is then the actual market timing. And there I use technicals, because for the market timing, I have to be very precise to place my entry, stop loss, and target. And for the market timing, as we discussed, I use daily time frame as execution time frame. I like supply and demand, and sometimes I sprinkle in a little bit of price action. But it's basically, in a nutshell, we married the best of both worlds, fundamentals and technicals, and put it into one strategy that I call a two-step mechanical process.
Okay, so fundamentals. What would you consider fundamentals? Interest rate expectations?
Exactly. So if I look at everything is derived from a futures data. So all my analysis happens on futures charts, because futures is the underlying asset, and this is what drives the market, right? So everything is CFD based. It's just a derivative from these futures. So so for instance, as you said, a good example is treasury bonds. So I'm looking at, if I trade equity indices. You told me before the recording started you like NASDAQ. I like also equity indices. I like Dow Jones, S&P, and also CFD stocks, by the way. And so I look at treasury bonds, whether we are overvalued or undervalued versus so in equity indices versus treasury bonds, whether we are undervalued or overvalued. And this is a big fundamental tool that I use, and I can plot this on the chart basically and see, hey, we are overvalued, so it's definitely not a good time to go long. So it's better maybe or timing wise to go short. But if I'm undervalued versus treasury bond, and even versus gold, for instance, then it's a very good time to go long, and then I go to the market timing. So yeah, it's basically also CUT data. I use CUT data. I use seasonality and stuff like this. So it's all, we can all plot.
What are you looking for in cut reports? You're looking for some kind of extreme value in cut reports, extreme 12 monthly high or 12 monthly low?
Yeah, exactly. Yeah, so you're aware of that. Yes, perfect. So yes, I'm looking for extreme behavior. So if I look at the retail behavior, for instance, I don't care whether they are net short or net long. I don't care about that. What I care about is whether their behavior compared to their previous behavior. If they're extremely now bearish versus their previous behavior 6 months ago, 12 months ago, 2 years ago, or whether they are extremely bullish compared to their previous behavior 12 months ago, 6 months ago, etc. And this is, and I look also at not only retail behavior, but also at the commercials, and apply the same concept basically.
Yeah, I understand. Okay, what about interest rate expectations? So, for example, Fed watch tools, those kinds of
Nothing. Everything I do is literally on my chart. So I don't use any external tools or news or media outlets to get some additional information. Nothing. Just everything.
You don't. Okay, you don't trade around CPI or FOMC, nothing like that. No.
Literally nothing. It's just basically everything is on my chart. So I'm trying to be as objective as possible. So and mechanic. So everything else is very subjective and very distractive. And that's why I'm doing everything that I'm using is on my chart.
Could you share a screen, maybe? Show us an example of how you analyze or how you would get into a trade.
Oh yeah, of course. With my pleasure, absolutely. I can. Let's look at also at. Let me share my screen here. Can you see my screen?
Yes, we can. We can see.
Oh, okay, perfect. Okay, perfect. Like, so we are looking at.
What is this system? Yeah. This looks very familiar. What is it?
It's TradeStation. It's TradeStation.
Okay.
Yeah, TradeStation, because I'm using always futures data, right? And with TradeStation, I can use futures data. So we are looking now at the dollar index as a future at DX. Basically, here's the symbol. Yeah. So. If we look now, and the dollar is really interesting right now. Now we start with step one, which is the fundamental process. So the fundamental step. So here I have the CUT retail data down here. This is the weekly chart. I have the CUT retail data down here. And what is really interesting right now is if I look at the retail data, and I make just a trend line here, from where we are coming. We are coming from very bullish behavior. So if the line is moving up, the retailers are getting more bullish, and if they're moving down, the retailers are getting more bearish. So they're getting, compared to their previous behavior. So if we look, we are now in 2024, now 2020, end of 2021, so beginning of 2022. So compared versus their previous behavior 2 years ago, we are the most bearish they have ever been on the US dollar, the retail traders. So now, one of my biggest concepts, you're laughing, one of my biggest concepts is retail traders are always wrong. Never trade with the retail traders. I like that you're laughing. So you maybe have a similar concept, Never trade with the retail traders, always trade against the retail traders. And if I also look what happened in previous years when retail traders, because now what I'm also using is I'm using here a horizontal line and check if we are maybe even at an all-time low extreme. It doesn't always happen, but if I'm at an all-time low extreme, this is even more like alarming to me that something significant is going to happen. So if I look here, we can see that back in 2020, 2021, we were at similar levels. Back in 2013, back in 2011, back in 2010. And every time what we can see here, if we were around these levels, that you see what happened here to the dollar. We got this monster rally, right? Or here, we also, 2013, we were at similar retail behavior. Look at what we have seen. We've seen this monster rally as well. Here basically as well, we saw the low of the low. And in 2010, well, we saw also a nice move up. So for me, and this is just looking at the retailers telling me already, I have to get biased in terms of market timing. I want to be bullish on the dollar, definitely not bearish, right? So this is one of the tools that I'm using. Now I'm having here the daily chart, which is, we are still in the step one, the fundamental process. Now this is basically we call it campus valuation tool. So here I'm looking at the yellow line. It almost looks like an oscillator or an RSI, but it's actually valuation. So the blue line, this is the treasury bonds, the 30-year treasury bonds. And the yellow line is gold. So if they are here close to that, we have here the horizontal red line and down here the horizontal green line. Once they're up here, they're overvalued. So it's more likely, okay, if we are overvalued on treasury bonds and on gold versus the dollar, it's more likely that the dollar is going to drop, like you see that here. Look at this here. You see the dollar is going to drop. So I don't want to go long, obviously, if we are close to overvalued. So what needs to happen, yes, the retailers are already bearish, but for me, I'm still not allowed to go long. So what has to happen is the dollar and gold has to go undervalued. And look what happens if I'm undervalued. Once I'm undervalued, price is going to most likely to rally, right? So I need to get undervalued as well. And then I look at and then the third and the last tool is basically I look at my own forecasting tool, and this is kind of a seasonality tool with a twist because it can plot also here the future prediction. So if I look at the current price here, what I can see is that we are making a low maybe somewhere around here, somewhere around beginning of February or mid of February. This is where I see the low, and the next high is around here, mid of March. So
so this is looking at previous DXY data, is it, and correlating?
Exactly. It's very important, not based on calendar day, but based on trading day, because trading day is way more important than calendar day, because sometimes you have the weekends interrupting as well. So this is taking into account trading days. So now these are my three tools that we just analyzed, and I want to have, since if I want to have the highest probability trade setup, they all have to be like quote unquote flashing green for me. So I have to be at the seasonal low, I have to be undervalued, and the COT data is already basically perfectly aligned, right? I mean, the retailers can get even more bearish, but I don't mind. So, and if that's the case, now let's assume everything would be already aligned, then I would go into the second step of my mechanical process, which is the market timing. Right now, I cannot time the market because the tools are not ready yet, especially valuation. Then I would look at the daily chart and I would say, okay, where is the demand zone? Hey, where's the demand zone? I have a demand zone. I have a demand zone sitting here, for instance, a drop-based rally. I have a demand zone sitting here, a nice drop-based rally, what I would consider a level on top of level. So, and if price comes all the way down here, right? If price comes all the way down here, and we are undervalued here as well, versus the dollar if you're undervalued versus treasuries and versus gold, then I would just place my order here. It's basically what I consider set and forget, because I'm a swing trader. I place this in advance and then let it play out. So that's, in a nutshell, very quick, my analysis process.
Okay, so you're looking for quite a few things to fall in line here. So
yes.
Potentially to get everything to fit in with your analysis to trigger a trade, you could be waiting some time.
Yes, but that's why I'm trading literally everything, right? That's why I'm trading. I'm not only trading FX, but when I trade FX, I trade major pairs, but I trade equity indices. I trade treasuries. I trade energies, crude oil and natural gas. I trade precious metals, including copper, platinum, palladium, and I trade agricultural markets. The next trade I'm waiting that is close by is soybeans, for instance, right? So I literally trade everything to agricultural markets. So that's why I have on a weekly base, I have maybe one, two setups on average, maybe one. It depends what the market gives me, but that's more than enough. You know, if I always tell people, it's always quality over quantity. If you want to make more money, if you're consistent in your approach, the only thing you have to do is scale up your funds. Get more prop firm funds, right? That's it. Don't change your trading style. Don't get into more trades. Don't do like don't use a different strategy. Get your KPIs, get your KPIs green, risk to reward ratio in conjunction with win-loss ratio. And then if these KPIs are green, money is just a result from your KPIs. And then once you're consistent, then you can just scale up your business by getting more funds, but don't change anything in your trading.
Okay, interesting. Okay. No, I agree. I mean, prop firms that are available. Of course, the funding is not an issue these days.
Yeah, it's not an issue, and that's perfect, right? Yeah.
Yeah. So, on average, how long would one of your trades run for? Are you looking for
good.
Are you looking for a certain risk reward?
No, it also depends. Yeah, it depends. I would say the longer I'm in a trade, the better, because then it's like going into my favor, obviously. But I would say anything between 1 week and 4 weeks, that's what I'm in a trade.
Okay.
On
1 week to a
average.
month.
On average.
Sure. And risk reward per trade? What are you risking per trade, percent wise?
I'm not looking, well, to be honest, I'm not looking into percentage risk. I'm always looking fixed dollar risk. So I'm basically managing in total $4 million of prop firm funds, and $2 million of the $4 million is a book fund. So what I do is usually I use a dollar amount. So I use like, if I say 1%, so overall I would say $40,000 with my 4 million in prop firm funds. So this is then one, and I'm trying to then replicate that same trade on all platforms if that's possible. Of course, sometimes a market is not available on one prop firm, and on the other one it's available, then I cannot place this trade there, obviously. But I'm trying to be like consistent, taking exactly the same trades on each with each prop firm. But if you want to have a percentage, then I would say it's 1% basically, if you want to have a percentage. But yeah, I look for fixed dollar risk basically usually.
Okay. All right. Could we see your FundedNext dashboard just to give us an idea of those stats? Just if that's possible.
Yes, absolutely. So I have it open already, if you can see it.
Yeah.
So I'll make it a little bit bigger. So first of all, what is important, what I want to show is that there's literally no breached account. I'm not one of those traders who's using 10 challenges to get like one payout. You know, nowadays it's common. We don't have to get into that discussion, but it's not like
it's a valid strategy.
It's a valid strategy, but I preach consistency. You know, it's not my style, and it's not something that I would encourage people to do. No. And so what we look now is basically starting from the challenges. So we have here this was basically the challenge. The first challenge. What I want to show you here is yes, obviously I passed, but what is very interesting also, if I look at trading overview, I passed everything. Actually, the challenge. So I passed, and it's all, by the way, it's all recorded on YouTube. It's all verified there. I record it every single day. People can watch it. It's super interesting. So the challenge I passed with 100% win rate. Right?
5 trades, 100% win rates.
Exactly. You see, it's flawless.
That's a pretty good win rate. That's a pretty good win rate.
Yeah. And it took me 11 days. And now if I go
basically out of 2 of those trades were basically scratch trades by the looks of it.
Yeah, I had to, right? Because I think we had the 5 trading days or so, 4 trading days. So
and then the other 3 basically made
so it's XPT is platinum, XAU gold, and US30 is the Dow Jones.
Right. And they're not particularly large trades. I mean, you're looking at 1 to 2 lots. Yeah, I see. But
no, it's not like it's not like going wild, right? It's not like taking, and that's again, I'm preaching consistency. It's not like I'm taking 5% risk per trade and then fingers crossed if this goes into target 1 to 2 and I pass the challenge. No, I do like 2% risk per trade or so. Yeah. And this is really
just
important.
Looking at the time the trades were running, 3 days for the US 30, 4 days for the gold, and just a little over 11 days for the part.
This was a lot. So, this was the first one I executed. I was a bit quote unquote stuck in this one. It took a little bit longer until it went into my favor.
Still less than
but this
2
happens,
weeks. Yeah, sure. Yeah. Okay. Excellent. I don't think I've ever seen a dashboard like that before, but that's certainly impressive.
And we can and so if I go now into my inactive still, let's go to the verification, and you see here the verification. So as well, of course, pass. And if we go look here to trading overview, look at this as well. Also the verification I passed with 100% win rate. right? And here I also took basically, here I took 3 trades, a gold,
Yeah.
X8 silver, and also platinum, and then again these mini lot trades because I had to take them. And actually, if you look at and that's quite funny because when I entered, exactly the next day they were starting to rally. These are all long positions, so that's why and on YouTube I call this video faster than scalping because it took me less than a day, less than 24 hours. Of course I couldn't time it, but that I think the title fitted nicely because
Okay.
yeah, it was really nice. And
Interesting.
if I look at, because then I was trading 1 month so far basically, and this was my payout, my first payout after the first month, so $5,800. It took me, well, I got that in 2 days or so on my account, all smooth and easy. So yeah, so that's my FundedNext experience so far. Really smooth, really good. So that's great.
All right. Thanks for sharing that. That's super. You can close those down if you wish.
Yes. I stopped sharing my screen. Yeah.
Yeah, sure. So have you always traded in this style, or is this something that you've moved towards trading, Mike?
Sorry, can you repeat the question? I didn't.
Have you always traded in this style, or is this something that you've moved to?
Yeah, I mean,
over time?
I always, well, I moved there over time. So I have, as I said, more than 12 years of experience, 10 years full time. I started almost everyone else. I think, a little bit scalping on a 1 minute to 5 minute time frame charts. But
Yeah.
I had, so a little bit about my background. I had a normal corporate job beforehand. And, the reason why I quit was basically I wanted to leave the rat race, so to say, the 9 to 5 grind, and I wanted to have more freedom. But when I realized that sitting in front of the screen 6 to 8 hours scalping, I don't want to replace one 9 to 5 with another 9 to 5, and this is way more stressful.
Exactly. I think some people fail to realize that trading can actually become more stressful and more time consuming than
because you constantly have your money at risk. It's way more stressful. So that's why I then slowly moved to swing trading, and then obviously it's a process. You develop, you evolve as a trader the more experience you get, and then you kind of fine tune your style. And this is basically now my style. This is I would say almost my end game so far. This is what I'm doing since now a couple of years, right? And just increasing the funds as we speak.
Okay, but that's good stuff. Thanks for taking the time. I mean, if you any help you could give to traders out there who are struggling, any tips, any areas where they should maybe spend some more time?
The best tip is don't focus on money. Yes, we're all trading because of money, but once you are money centered, then your trading goes, sorry for my language, quote unquote, and your trading goes shit. You have to be more process based. So people have to start thinking in processes when it comes to trading rather than money or chasing the money, because then they are starting to get greedy, fearful, and all these kind of emotions kicking in. So you have to be process based. You have to think about your KPIs, risk to reward. I mean, in trading, basically for me, there are only 2 KPIs: risk to reward in conjunction with your win-loss ratio. And if we have to weight it, then risk to reward is much more important than win rate, because you can have less than 50% win rate and still be making a quote unquote shitload of money. So that's the 2 KPI. That's the 2 KPIs in trading. So the people have to get them green. Basically, you have to make sure that they are okay, and then money is just a result of these KPIs, right? And then they are following a process, and then they have to scale up. So be less money centered, be more focused, be more process oriented, and then it should and then you just have to take it should follow, right?
Back testing, is that something you've done extensively?
Yes, obviously, I would, back testing is something that I would, it's more like, for me, screen timing was in the past, sitting in front of the screen, drawing lines, doing a little bit of, hey, how did price behave here and there, and what happened in this scenario. This is my kind of back testing. And yes, I mean, that's how I did it, but there's no like back testing tool or so that I've ever used in my life. So this is basically
okay.
back testing. Yeah.
All right, just thought I'd ask. Okay. Well, thanks for your time, Bernd.
No, my pleasure. My pleasure. Thank you for having me.
No problem. No problem. Good to speak to you, and hopefully speak to you again.
Likewise. Yes, 100%. Let's do this again.
All right. See you, Bernd. Bye.
See you. Bye bye.